Monarch Networth Capital Institutional Equity Desk has initiated coverage on IFGL Refractories. This is a prominent refractory maker with over 4 decades of experience. Let's learn about why the coverage was initiated as well as some information about the company. What is IFGL all about? IFGL has a strong global presence with manufacturing facilities spread across the globe. EI Ceramics in USA, Hoffman Ceramics in Germany, IFGL Refractories in India, Monocon Ceramics in UK and China. It is one of the leading Indian refractory makers present in flow control and advanced refractory segment with marquee clients like JSW Steel, TATA Steel and Arcelor Mittal among others. Promoted by an industry veteran, Mr. S.K. Bajoria in 1975, today the company is one of the prominent names in the Indian and global refractory market. And the future looks even more promising with expansion plans underway for the company. Why is Monarch covering IFGL? MNCL's coverage of IFGL is driven by several standout features packed in a strong domestic refractory player. Here is just a glimpse of what makes IFGL such a robust and strong company. IFGL is a 35-year-old refractory maker supplying to marquee steel manufacturers in India and exporting to 60+ countries in the world. The company commands 12% market share in the flow control segment, making it the third largest player in India. It's a net cash company generating consistent free cash flow. Over the years, IFGL has reported robust top-line growth and best-in-class gross margins. Expansions galore. As great as the company past has been, the future looks even brighter. IFGL has a strong array of expansions planned. It is setting up a greenfield plant at Vizag and a brownfield expansion at Kandla, which would help deliver double-digit revenue growth for the next 5 years. The Kandla expansion will double IFGL's unshaped capacity from 24,000 metric ton to 48,000 metric ton. Vizag expansion would enhance IFGL's ability to service steel plants in the southern part of the country. So what does this mean for the company? The expansions would help IFGL and new products reduce logistic costs, boost exports, and increase its market share in the advanced refractory segment. Domestic refractory industry in a sweet spot. The domestic refractory industry has consolidated over the years, with organized players controlling 60% of the market. Listed players have outgrown their unlisted counterparts in financial year 16-19. On the back, faster expansions, stronger balance sheet, and increasing free cash flow, domestic steel production growth is expected to grow at 7% in financial year 20-21. Refractory industry growing at 1.5 times of steel production growth. We expect IFGL and its listed peers to continue delivering double-digit growth. Margins have bottomed out, uptake expected in FY20. Gross margins for the refractory industry has declined during FY18-19 due to sharp increase and scarce availability of raw materials. Raw material availability has improved towards the end of FY19 and prices have also come off their highs. We expect raw material prices to remain stable and decline further in half 2 FY20, and this would lead to gross margins improving over FY 2021 estimated. Valuation and view. IFGL is trading at approximately 13 trailing 12 months PE, almost 50% discount to its peers average TTM-PE. As compared to its own 5-year average TTM-PE, IFGL is trading at almost 28% discount and hence limits any downside risk from here. With expected better performance in the future, the investors will be rewarded through both earnings growth as well as valuation multiple expansion. MNCL's analyst remains convinced with IFGL's growth strategy and estimate 9% CAGR in revenue and 14% CAGR in earnings over FY19 to FY21, coupled with strong margin uptick and improving return ratios. Report undertakes detailed valuation comparison with relevant peers and on a conservative basis assigns 9 PE multiple to its FY21 expected earnings. MNCL initiates coverage with strong positive stance and target price of Rs 268, offering 67% upside in a year. MNCL's analyst Vinay Menon has done in-depth research of the company, by visiting companies' facilities and independent ground research. Vinay has been extensively covering the refractory space at MNCL and has previously covered the building material segment. For more detailed information of the company, please connect with the analyst. Let us take you through MNCL's rigorous fundamental research process, which forms the DNA of its reports. MNCL's institutional equity desk is committed to set new benchmarks in providing path-breaking and completely independent research service on under-researched and undervalued high-quality mid-cap stocks with an aim to add value to all stakeholders. The DNA of the equity team is to do differentiated research continuously and consistently by analyzing data from multiple sources, undertaking channel checks, and interacting with several stakeholders. The focus is on showcasing research work on companies with strong business models, which are yet small in size but have long runway of growth and also have large gap between price and value, which could result in superior returns for investors. Disclaimer. Please read the disclaimer carefully before making any investment decision.